All righty, good afternoon, good morning, good evening, traders, and welcome to the Friday afternoon checkup. All right, we're going to go ahead and take a look and see what's going on right here. And the theme today is really about the Forex trader nightmare. When is it time to give up on your trades? We're going to go ahead and take a look at a couple of trades that we've been talking about in the market, and we've been actually looking at some trade setups. So I want to go ahead and welcome everyone to the trading show today, as we go ahead and look at a couple of positions that we're currently holding as we head into the weekend. And I'm going to go ahead and take a look over here on the MyFX book right here. And you'll notice that we've got a lot of JPY crosses that are in drawdowns. Let's go start off right here at US dollar JPY, we were down. New Zealand JPY, we down. Pound JPY, we are down. Swiss JPY, we are down. Aussie JPY, we are down as well. Well, let's go into the first one right here, Aussie JPY. Let's take a look at the charts and see what's going on with the Aussie JPY. And is it time for us to go ahead and cut our losses? Is it time to go ahead and get the heck out of Dodge and go ahead and make a trading decision? Now, traders, we're going to jump into all of this right after this. All right, traders, welcome back. And yes, we're going to go ahead and take a look and see exactly what should we do with the JPY crosses. Is it time to go ahead and cut our losses and get the heck out of Dodge? Well, I'm going to go ahead and take a look at the 4-hour time frame first. I'm going to go ahead and get rid of any Fibonacci levels that I don't really need. And I'm going to take a look at the way the markets are waving. So if you take a look over here, in fact, I can even go to the daily time frame to get a little bit more information on this, and we're going to take a look and see how this is all playing out. So if I compress the charts on the Aussie JPY right here, you can see there's a lot of support coming off this area right here. A lot of support coming off that area. We did have a breakout here, a false breakout, and price started moving back up north. So it means that if the market is showing a lot of support over here and a lot of resistance up here at the top, then we should be getting pretty excited about the possibilities of price going all the way back up to this level. Well, you're only going to get excited about this if you're actually trading in the right direction. If you're not trading in the right direction, I know traders are going to be a little bit concerned about that. So let's take a look and see. Now, we are selling on the Aussie JPY, and let's go take a look and see why are we selling Aussie JPY. Well, firstly, number one, we can see we had this false breakout. Now, if I go ahead and put my fibs up from the top right here, we'll notice that the market created this wave one right here. Look over here. This is our wave one going up right here, all the way up to this high right there. Now, the pullback dropped back down here, giving us a wave two. And right over here is where our wave three is. And price is currently trading right there. Now, what we've done here, we've gone ahead and looked at the inside structure. The inside structure, we've got a wave 1, 2, 3, 4, and we've now breaking out of this fourth wave right here, which means that we're chasing after an inside fifth wave. So which means our third large wave is probably going to be a lot higher, or at least a little bit higher. So let's take a look and see where that's at. If we're going to take a look and see where that's at, we're going to go ahead and compress the charts a little bit right here. And you're going to take a look over here at around about the price level is going to be about 89.12. There it is there. Now, what is price trading at right now? Price is trading at 88.29. So on the Aussie JPY, we could probably still see about another 100-point rally before price starts turning around, heading back down south. Now, the reason why we were selling on this particular pair right here is because we got to a point where the market was trading at resistance. So if you look over here, we're inside a range, right? And price was at the top of the range right here. So we're started selling right here at the top of the range, and instead of price going down to the bottom of the range, it started breaking out. Now, we know that price is going to break out at some point, but we cannot time it. But what we always do is we always look at the alternative, which means that if we're selling Aussie JPY, then that means that if the market does break out of this range and it goes north, we've got to look to see where price can move to. And we've got to make sure that we've got good equity management in our trades so that we can ride this wave out. Because traders, that's really what it is. The market's going to go up to this level right here, and then what's going to happen is it's going to turn around, head back down south, and we're probably going to go further inside this previous range, back down to around about 78.45. Why do we know that? Well, markets move in waves, and because the market moves in waves, we know that waves create waves within waves within waves. And so if we follow and we get a good rhythm on how these waves are moving, we can go ahead and benefit from these waves by trading the tops and bottoms of the wave structure. And then at the same time, always making sure that we are going to consider that the market could at any time go into the alternative setup, which is important to understand. Now, when it goes into the alternative setup, we want to be ready to be able to trade that. Now, so the Aussie JPY, just so that everyone knows, we've been sending out some signals, and we've been sending out signals based on all these trading opportunities, right? Based on all these opportunities. But we are currently seeing some higher drawdowns, or at least some drawdowns, in the Aussie crosses, or at least, sorry, the JPY crosses, all right? So we've seen some drawdowns in the JPY crosses. But everything that we've seen right now and everything that's happening right now has been accounted for. Let me explain to you what that means. When we say it's been accounted for, means that we're managing our risks accordingly. And so if you're following these trade setups, you have to absolutely make sure that you are following the same rule sets, meaning not everyone's trading accounts is the same size. Not everyone has the same leverage, which means if you've got a US-based trading account, you're probably trading with a 1 to 50 leverage. If you're trading with an international account, you could have 1 to 200, 1 to 300, 1 to 500 leverage, up to a 1 to 1,000 leverage. So every broker offers different leverages, and of course, based where you're at, you will have different leverages on your account as well. Now, because you have different leveraging and you have different size trading accounts, not everyone can trade all the signals. So which means, traders, you have to start becoming more selective of what you choose to trade. All right? And so what you've got to do is you've got to say to yourself that, hey, you know what? I'm going to be able to, or at least I'm going to focus in on certain currency pairs so that I can manage my risk correctly. And if you do over leverage, meaning that you trade more currency pairs than you should, and you get into more positions than you should because you've added maybe a larger lot size to your positions, then you have to be accountable for that. But before you get trading, very, very important, before anyone starts trading, you've got to understand where your risks are. All right? And so because of that reason, you have to make sure that all those check boxes are checked off before starting to trade. All right. Now, the theme of this video is all about when is it time to give up? Well, you see, traders, that depends how you go into the fight. All right. Because this is a fight between the bulls and the bears. So it depends on how you go into the fight. Where do you draw the line and say, I'm going to give up on trading? Well, again, it all depends how you approach the fight. And let me explain to you what I mean. If I go in, and there's two ways to go into this fight. There's two ways. The one way is if I go into a trade position and I go ahead and say, you know what? I'm going to enter a sell right here. And if the market goes ahead and takes out the previous high right here, I'm going to go ahead and put a stop loss there and cut my positions at that point. So which means I can calculate my risk and say, I'm going to risk, let's say, 1% on this trade, or 0.25%, whatever that is. I'm going to risk X amount of percentage on my trade, and I'm going to work out my risk capital based off a stop loss above this level. Which means if the market moves above there, I'm cutting my losses and I'm getting the heck out of Dodge. Now, traders, that's a decision everyone has to make for themselves, because other traders have other ways that they want to go ahead and approach the market. Now, remember, I mentioned there's two ways to approach the markets. All right, there's two ways to fight this fight. The second way is to go ahead and say that I am not going to limit myself to just this one entry point right here, but I'm going to enter multiple entries with lower risk, all right, or these lower lot sizes, all right. So what I'm going to do is I'm going to enter the market on pieces of what I have in my equity, and I'm going to enter the market multiple times where I find it's necessary to enter. But I'm going to make sure that this is well within to what I expect to risk on my total position. So if you said that, hey, you know what, I'm going to go in with this trade, I'm limiting myself to maybe 4 currency pairs. So what I'm going to do is, based on the 4 currency pairs that I'm trading, I'm going to go ahead and risk a total 2% on each trade. And which means that you're going to enter and you're going to manage your entry points. You're going to manage where you go in. You're going to manage your equity based on all your entry points maximizing out at 2% risk. Okay. Now, that you can do. Now, what you can do here is you can say to yourself that because the market is at that resistance, I'm going to sell. But if it breaks through that resistance, I'm not going to give up on this trade. I'm going to re-enter. Maybe I'm not going to re-enter multiple times in between here, but maybe I'm going to wait for the market to get back up here to the 1.27 and I'm going to enter there. Whatever your rules are, follow them based off your equity management risk parameters, right? Don't go ahead and break your rules, which means that if we're entering here and we decide to enter more in between, and that's not part of your risk tolerance, then you need to go ahead and say, well, I cannot afford to enter multiple times here, but I can afford to wait for the market to get to this level and then start selling at that level. So again, there's 2 ways to approach the market. One approach is saying, hey, I'm going to cut my losses and I'll place a stop loss above the previous high. The next option is to say, hey, I'm not going to go ahead and cut my losses at that high, but I'm going to go ahead and enter small entry points to build up my position so that eventually when the market does turn around and start heading back down south, I've built up multiple positions right here, keeping to a risk tolerance that I'm going to accept, so that when the market turns around and heads back down south, I'm going to make up my profits and plus some. Again, that's going to have to be up to you. So the question here is, when is it time to give up? And the answer to that question is, how did you plan to go into this fight? What was your game plan going into the fight? And that, based on your game plan, that's the decision you'd make based on your trading. Now, let's go ahead and take a look at some other JPY crosses. So Aussie JPY, we could probably expect another, like I said, about 100 pip rally before we could see the market start to turn around and head back down south. So these are the type of things that I have to go ahead and sleep at night and consider that, okay, I get it. I got into a trade right here. I sold JPY. The market's broken through. That's okay. I'm not going to wait for it to go back up to this level. And then at that level, I'll be expecting price to push down lower. All right. Now, let's go into another pair that we have got open right here that is getting us deeper drawdowns. Let's take a look at the JPY right here. This is the pound JPY. Pound JPY is giving us a headache right now. Let's figure out, is it time to cut our losses on the pound JPY or start cutting some of our positions of the JPY? Well, here is the JPY setup right here. Now, if you go ahead and take a look at the daily time frame, right, what are you seeing? You're seeing quite a bit of range-bound trading, okay? The market's really range-bound. And in fact, let me go ahead and kill this out the way here and just focus in on what we're seeing right here. Look how the market has found resistance up here at the top. We've got support down at the bottom. It didn't come quite down to the support. There was still room for the market to move down a little lower, but we've seen this big, strong rally. Now, even despite of this big, strong rally, the market's going to find a way to bounce off resistance. Now, we've got this backside of the trend line right here. Here is a resistance level we are at right now. We can see that the oscillator is starting to move into an overbought condition. So is it time to start cutting the losses now? No, it isn't. Because why? Because traders, we should get into the habit of not cutting our losses when the market is going to move in our direction. That's when we should stick around and stay with our trade. Which means that if you take a look over here, okay, and you look at the setup right here, then what we need to do is we need to wait for price to start working its way back down, all right? Now, whether it's just going to be in a correction move or it's going to continue in this range, well, that depends on what happens in the market, right? But what we do know is that we need to be patient, and we don't need to make decisions based on panic, but more based on proper, sound equity management and technical analysis. So we're going to wait it on. All right, we're going to wait on this a little bit longer. Okay, very, very important that we do that. Now let's go ahead and take a look and see what's going on with the next currency pair. Here's the next JPY cross right here. Take a look at the CAD, the Swiss JPY. Swiss JPY, we're also down. Let's just take a look and see what's going on with the Swiss JPY right here. And do we need to find a sort of a happy ground here? Let's go to Swiss JPY. All right, so Swiss JPY in today's trading has been pretty strong in today's trading. Let's go ahead and kill some fibs right here. All right, let's go take a look and see where we are with inside the market cycle. Well, here we have wave one. All right, I'm going to go ahead and label this so you can see. Here it is, wave one. Here we have wave two. Price has gone ahead over here and created the wave three. So we've got a wave three up here at the top. We had a nice little pullback here in the zigzag pattern. Got down to the 382 bounce and started moving back up north. Now we're at the 127 right here, and that tells us that price is going to start working its way back down south. So traders, right now, the Swiss JPY should start seeing its way back down south. Take a look at this. What's nice right here is that we've got this rising wedge. Take a look here. If I go in from the bottom right here, there it is. We've got a rising wedge forming right now, okay, where price is bouncing back and forth right here. And we should see a breakout, and it's going to be a pretty strong breakout, and that is the low there at about 117.62. We're looking for price to drop back down to 117.62. And we can see that the oscillator is an extreme overbought, which means that with resistance, with our wave structure, we should see the Swiss JPY starting to recover, or at least dip, lose value. All right, at least that direction. So we're looking for a dip back down south in order for us to be able to enter again on some new sells up here at the top and look for price to go back down here. So we're looking for approximately, if you go ahead and do the math right here, we're looking at a possible 900, almost 1,000, actually 1,000 pips, probably a little bit more than that. About 1,000 pip drop is expected in the Swiss JPY. And the beauty of this, traders, when we start seeing rising wedges like this, it means that we could possibly see a very aggressive move to the downside. So keep an eye on this. The steeper the rising wedge, the more aggressive the sell-off is going to be. This is not quite, it's about a 45 degrees, not quite a a 70 or 75-degree angle, but we certainly are seeing a rising wedge, and so we can expect a sell-off on this one right here. So again, very importantly, do we trade based on panic, or do we go ahead and take a look at the setup and then trade off based off the setup? All right. Now, here we go. We got a trader right here that's asking about the New Zealand US. Is this the New Zealand JPY as well? I'm assuming you're referring to the New Zealand JPY. All right. So let's go ahead and take a look and see, are we down on the New Zealand JPY? Is the New Zealand JPY giving us a headache as well? Let's take a look here. New Zealand JPY, yes. We're in multiple positions on the New Zealand JPY. Let's take a look at New Zealand JPY and see if we've seen the same sort of pattern. All right, let's go here. Again, always go into the daily to get room, get an idea of what's going on. In fact, I'm going to do something better here. I'm going to go ahead and do a quick housekeep here. I'm going to clean up everything here, and let's evaluate what's going on right here. So the first thing that I'm seeing right now, right off the bat, is I'm seeing that the oscillator is in extreme overbought condition right here. Look at that. All right. So this means that the bulls are starting to run out of steam. The bulls are starting to get a little bit tired on this, and we should start seeing the market dip down. Now, what creates this market to dip down? Well, what's going to create this market to move down is resistance, right? So if we go over here and we pop up resistance, we can see right here we are at a definite resistance level right there. Okay, the market is at resistance, so we should start seeing price rejection right here, even if it's just the short term. Now the next level of support is going to come down here, which means that all these little support levels that we're seeing right here are going to be levels that the market is going to go ahead and try get back down to. Okay, so as the market corrects itself, watch out for those levels of support. And you can see right here, as we come off the high right here, we're looking for about a 225 pip drop off that level there. Now, what else can we take from this? Other than just this information right here, let's look at a little bit more data. All right, so if I pull in a little bit more data, there's not a lot that this is telling me, okay? But I'm going to point out something that's important that I'm noticing right here. Firstly, number one, the most important thing that traders need to understand right here is that the market moves in waves. And if we're seeing a wave structure that looks like this, and price goes up and takes out this high right here, this means that we're actually heading into a new bullish trend. Even though it's a larger trend, it's a new bullish trend, which means that traders, that we've got to consider that these wave structure going up right here must mean something, because in order for this market to create a bullish trend, it's going to probably create this big bullish crown. Here's going to be the left tip. Here's going to be the center, and then we're looking for the right tip to be here. So once the bulls score a point and they take out the highs over here, what's going to happen? Price is going to come back down. Now, what could also push price down? What could also push price down is if the market completes a wave 1, 2, 3, 4, and 5. So if we have a 5-wave structure, price is going to come back down to reset. All right, and when it resets, we'll see a dip, maybe not quite the left tip right here, but we're going to see a dip, and then the rally takes place again. So which means the lows here at the 4th wave are important, because price is probably going to come back down to retest that before turning around and going bullish. Okay, so let's take a look and see what we've got here. So I'm going to go ahead and monitor the swings that we have set up right here. And I'm going to go ahead and I'm going to take this from the low down here. I'm going to bring it all the way up here. I'm going to take it from that low. I'm going to drag it all the way up here to this high. There it is there. And so as I do that, I'm noticing that we've got a 1.27 right here at around about 83.38, right about there, 83.38 right here. Now, With 83.38 playing out right here, that's going to be a key level of resistance. So which means, traders, that once we get to that level, which means it's just going to have to take out that high, but we're in a very, very close area where we're going to anticipate this pair to start selling off once again. All right. So it's very close. So this is again, once again, when we talk about when's the time to give up, this is not the time to give up. This is the time to make sure you've got proper equity management to ride your waves and ride this trend out. Because what's going to happen is the market's going to turn around and it's going to come back down and it's going to target at this level right here. And you do not want to be that trader that says, I should have. Okay. And so we're going to call this the fourth wave target right here. And this being the fourth wave target means that price is going to come back to chase after that level. So as we rally, we're going to see a turnaround to head back down here. And so again, just like we saw with the other pairs, here's another 850, probably close to 900 pips. Close to 900 pip opportunity as price starts turning. Traders, get excited about JPY crosses. There's a lot of things that we're seeing currently right now that is clearly telling us that the JPY crosses are absolutely in a position where it's going to start gaining ground. Remember, the rallies that we're seeing against the JPY crosses is due to, of course, JPY losing ground against the major counterpart. But there's going to be recovery in the JPY crosses, and it looks like we're going to be very close to that, whether it happens in next week or the week after. We know that it's imminent. It's going to happen. It's coming soon. The technicals are reading this, and so we need to be patient and be more committed to our positions. So with that being said, traders, I want to go ahead and thank everyone for joining us today. Hopefully this has given you a little bit of comfort heading into the weekend. We'll see everyone back again next week. Have a fantastic weekend. This is the FxBigDog signing off. What do you mean? What do you mean dress up now?